Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question.
Well, today, guys, was a home run for the bulls here. My account's up nicely here as we see a nice bounce back in equities just after that key Powell speech. Taking a look at indices, you've got the NASDAQ up 2.07%. You've got the S&P 500 up 1.6%, Dow Jones up 1.5%, and the Russell ripping 2%. You also have Bitcoin up 3.6%, Ethereum up 6%, and good old Dogecoin up 4.5%. And the big ticket item for the day, Fed's Powell says, my base case is that there is no policy signal from tariffs, but I can't know that. If the economy remains strong, we can maintain policy restraint for longer. Inflation expectations have recently moved up, with tariffs as a driving factor. And overall, the rate cut expectations for this year, according to the Fed's dot plot, remained relatively unchanged. So the market is absolutely ripping today because basically Powell said that he's not too concerned right now about tariffs. He actually even indicated that previously in the 2018-2019 era, when tariffs were imposed, that there was no big bump in inflation that was sustained, and that it was in fact a transitory inflation item. So the market, hearing this confidence from Powell in regards to tariffs, definitely gave the stock market a little bit of a bounce. From a technical basis, the S&P 500 is sitting at 57.15, which is that key level that we've been talking about for a while, and I think it's a little too soon to call complete victory over this. We need to start seeing price action break out and stay above this area in order to really form a solid low. But for now, it does seem very likely that we've put in a low for this market. And this white line that you're looking at is the April 2nd deadline, where Trump has promised the retaliatory tariffs go into place. But I've been mentioning on my stream and videos that I actually think that this market is in the process of bottoming out before the big scary event that everybody is so worried about. Markets love to play gotcha, and when everybody is afraid of a certain date and event, oftentimes the market actually kind of trades ahead of that and finds a low while everybody sort of sells out of their shares and gets scared out of them. Other economies are smart. They know that if the US imposes tariffs and it hurts their economy, it is likely to do so disproportionately to theirs than it is to the US. For example, Canada's economy is more hurt by tariffs than the US's economy, as the US imports a lot from them and exports a lot less on a relative basis in terms of a GDP factor. So there is a strong possibility that with Powell signaling some confidence about the situation and that deadline coming, we could see the possibility of some kind of negotiation at at the table between key economies and the United States before the imposed date. And I would not be surprised if between now and then we find some more conflict resolution rather than escalation, giving the opportunity for the market to rally. Now, of course, this is a lot of speculation, but the risk to reward is very good. And if you've been watching my videos, part of the reason I showed you my P&L up 1.7% or so on the day for my account. The reason I've gotten so bullish and started accumulating longs is because the skewed risk to reward. Everybody got scared all at once. Everybody went out and bought puts, and those who bought puts this week are learning a really painful lesson. In fact, many people who may have bought puts that expire today are experiencing max pain right now as puts are completely getting smoked this week. So again, the lesson here is that sometimes the most costly thing is getting bearish alongside everybody else. Paying for protection thinking you're saving yourself can actually cost you some major losses, especially in options. So when everybody ran to one side of the boat, I've been mentioning that I've on a long-term basis been picking up shares of my favorite companies. So the bounce back today being so violent is very, very much so a lot of short covering, I think, that's going on as Powell signaled some confidence in a market that really desperately needed that. Gold also hit a record all-time high, $3,043 an ounce as we speak. I continue to trail stops on this one. My stop loss is just below market structure here around 29.80, and I do think that there is more upside for gold coming. I'll continue to trail a stop, and now that we've put in another consolidation phase here, I may actually look to do that sooner rather than later. Part of the reason I've been bullish on gold has also been this very bearish outlook for the US dollar generated by our economic heat map. What you can see under the US dollar economic impact tab here is that most of our factors are still pointing bearish. We have inflation moderating, which is less attractive for the US dollar, positive for stocks, negative for the dollar. And at the same time, you have mixed labor data, but ADP missed expectations, non-farm payroll missed. So you've got some bearish readings here that weaken the case for the US dollar and make gold look relatively attractive. Stocks, however, with cooling inflation are a little bit more mixed. And so when everybody was screaming recession and posting up headlines of, terrifying news, oh, the market's going to crash, Trump's going to ruin the world, all that stuff kind of came to roost all at once. And that contrarian trade became too attractive not to take. And that's why I went long a lot of stuff this past week. Bonds are also slightly higher here today as we see yields lower, basically seeing a little bit more of a dovish Fed Powell and just outlooks that, again, there's not too much to worry about in regards to tariff inflationary concerns. Again, the big thing that I took away from the meeting was that Powell kind of ruled out the idea that tariffs are going to be this ginormous inflation problem. In fact, I'm not saying that tariffs are no problem at all. There certainly are some risks to it, but most of the risk is more on the growth side, where Powell feels that the economy is actually in a really good spot, and not on the inflation side, where we're more sensitive. And the NASDAQ has a lot of work to do. I wouldn't say that we're out of the woods just yet, but if we can constructively break through some of these levels, especially like tomorrow, if we get some follow through, this looks really constructive. And I do think, like I said, that we may have already started to put in a low to this recent market panic that we've seen. Everybody got really loud about how much they think the market's going to crash at, just as usual, the worst possible time. By the way, if you're interested in getting access to the Edge Finder, I'll leave a link and promo code in the description down below to pick up a copy. You can also find information about the tool on our website, a1trading.com. And if you'd like to get updates about news events, market analysis, chart markups, all that sort of stuff, make sure to do so in our free to join Telegram channel. We're also doing some giveaways in there as well. You can find the link for this in the description down below. I've got the all markets ready. If you want to try and pull up a mirror in the financial juice, just keep an eye on what we've got. So guys, we've got the dot plot coming out. The news will be dropping here in the next minute. All right, I got gold, NAS, S&P, just so we can see a price reaction here as the data drops. Initial movement here, a little bit mixed.
I'm seeing SPY go up a little bit initially right out of the gates. 562 up 2 points already. I'm looking for anything dot plot, looking for any headlines, anything flashing red on my screen. But initial reaction is markets up slightly.
Gold also slightly higher, 30.36 by the way. Wow. NASDAQ slightly higher, S&P slightly higher. Dollar initial reaction is lower. But again, like I said, guys, just be careful with, this could be way back here, it could be way up here. It can move like crazy. So just
watch SPY 560 and SPY 572. I'm looking at basically the 560 to 572 window as that's my market maker range that I'd be looking to see if price can touch them and tag them, but usually not necessarily close above or below.
Yep. And a lot of this stuff here, guys, is obviously going to be a lot of algo trading, just reading data that's coming in and placing instantaneous high frequency trades. So that's where a lot of the noise comes from, is because it's still digesting everything. It's trying to price it all out. So just understand volatility is likely to be higher. Chris, you got anything on financial juice yet?
All I'm seeing here, intraday decision actual 4.5. That's what we knew was going to happen. It's going to be the pause. Median rate forecast for next year, actual 3.37, forecast 3.37. That's on par. The next 2 years, actual 3.12, forecast 3.12. That's on par. So pretty much exactly how the market expected the Fed to deliver today. So far, so good. That's just hitting expectations. Long run, 3%, forecast 3.12. So longer run, that looks like maybe another chunk of cutting rates, but I don't know what long run means. Maybe that's 2026. Because if I look at the dot plot on my screenshots from this morning, the dot plot that I see goes out to 2027 and then longer run. So I'm just assuming that's out to 2028. And the Fed has those, most of those dots sitting around 3%, between 3 and 3.2% roughly. But I want to get a picture of the current dot plot, which I'm not seeing it yet. As expected, here we go. I got the new dot plot, Nick. Yep.
All right.
So we've got most of 2025 sitting at, it's the same thing, dude, sitting around like 3.8, 3.85. I'll take a screenshot of that.
Yeah, there you go.
Yep.
So dot plot coming in pretty in line with what we previously had.
Correct. Right here was the previous. Here's the current. It's the same. Like this is what I'm watching for 2025. This is just below the 4% line. And this will all be on the CME watch tool as well. But if you go here for 2025, it is just below the 4% line. Now, the one thing I want to look at for this recent dot plot is, I guess we have some that they're right. The majority is sitting right below 4%. There's still some, I dare you say, dissenters that are just above that. So that would be essentially saying we're going to hold. We should hold.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.